let's talk about the easiest way to get into investing in a way that I think is important because it's automatic. It helps you have a diverse portfolio. It helps you rebalance automatically as well. And it allows you to customize it based on your goals. So let's kind of talk about this, and I want to show you my own account and what I do every single month. So this is today's value that we're at today. Good day, but there's ups and downs, right? You can't look at this and be like, I know what I'm doing more than any other person. If you look at my video yesterday, it was not super great in terms of the daily value. But what I'm going to talk about today is actually right here, the Schwab Intelligent Portfolio. So the Schwab Intelligent Portfolio is an automatic advisor. It's a robo advisor. So you can see I do have some money in this kind of portfolio. So it's not most of it. Most of my money is in cash right now, but this is an automatic portfolio that I use, and it's by Charles Schwab. It's called their Intelligent Portfolio. You can look up robo advisors if you want to look at some other options, and there's a whole list of articles on the overall picks, and really there's a lot of different ones. So we have Betterment, Wealthfront, SoFi, a bunch that I haven't heard of as well. So you shouldn't really look into this too much because a lot of these are going to be affiliate links, which means that they get a commission if you join through these links. So I wouldn't look too much at like what they rank as the best one. But what I would say is you want to be looking for a management fee closest to 0%. Charles Schwab is 0. That's why I have them. Okay. So there is a minimum though. It does change. But right now, I think it's $5,000 to get started. If you want to join a different one, you can. There's others that have 0 management fee, and you can get started for $0. I've also used this one, Betterment, because I had a cash account with them, and then I turned it into, I added the robo advisor, which is a 0.25% management fee. It's not bad, but if you get a regular advisor, okay, which is like a real person at Merrill Lynch or at Charles Schwab, it could be 1%, 1.5%. So we're talking about 5 times more than these robo advisors. And the cool thing with the robot advisors is that it's based on algorithms, and you can see everything, and there's no emotion of a person trying to do trades for you. The most important thing of these robo-advisors also is what they're holding, right? And for the most part, they are going to be holding ETFs. So they're going to be holding exchange-traded funds, which include tons of stocks inside the actual fund. So they are betting more in the market rather than trying to stock pick like some advisors might do. And over time, these ETFs are shown to do much better than stock picking by hedge funds or active managers. You can look at some of my other videos on that. Now, before I forget, I'm giving away $100 for you to use to buy a stock next week. So all you have to do is be subscribed and click like. This is as a thank you for my first 100 subscribers. So click like on this video and make sure you're subscribed. All right, so let's look into my Charles Schwab Intelligent Portfolio, which is what I recommend if you are able to put down this $5,000 start. If not, you can check out other ones. And I would recommend maybe you can use Betterment. I think that they were pretty good in terms of how everything's laid out. They're pretty similar in terms of what they do, in that they mostly buy ETFs, they mostly buy similar ETFs, and they have a similar setup. So right now, this is what my portfolio looks like. There's an app as well, which is kind of cool. And it holds all these different stocks, okay? And you see how it says U.S. large companies? If you click it, you're going to see exactly what it's owning for covering the U.S. large company stocks. So it's using VOO, which is Vanguard's S&P 500 index, and you can see the gross expense ratio is 0.03%. So all of these have expense ratios. So just to own the fund, there's an expense ratio, and then some of the different companies will have an advisor management fee, which with Schwab, it's 0, okay? So you want to make sure that they're holding low-cost index funds, low-cost ETFs, and that way it's not bringing up fees, which is absolutely killer in a negative way to your bottom line and to your growth over time. So it's buying tons of stuff. So you can see stocks It's buying US large companies, international large companies. I have $5,000 worth of that. Small companies, developed small companies, emerging markets, REITs, which are real estate investments, and even commodities like some gold automatically in here as well. It also covers bonds. So you'll see over here are my bond holdings, and it automatically is doing these percents based on what questions you answer. I'm going to go through that in a second, but it's holding investment grade bonds, US corporate high yield bonds. It's holding US inflation protected bonds. So if inflation goes up, you don't get negatively affected there. So it's super diverse, okay? So that's the first thing. Incredible diversity, all in one, automatically. It buys, it sells, it does everything automatically. So this is all based on some questions that I was asked. So I created a goal. I tried to create the best possible outcome to reach that goal. And you can see here the goal is 4 million right here. And it thinks that I'll hit it. I'll hit 4.2 if I keep my contributing at the same rate, right? So what am I contributing? Right now I'm contributing 10,000 a month, I believe. Oh, 5,000 a month actually. If I move this to 10, which is what I'm doing now, it's just not set up, but this probably needs to be updated as well. And I can change my risk profile. So I am young. A lot of you guys are young. You're going to want to be more in stocks than fixed income like bonds. You can have some commodities like gold or precious metals. And it has some cash. Okay, it keeps a percentage in cash because it needs to buy and sell things, but it's actually because this is the way they make money, is they hold your cash and they get a better interest rate from other banks or able to do stuff with your cash, right? So that is how they make money currently. But that's okay, right, to have some cash allocation in here. So how does this work? Well, I'm going to go through the steps with you, and I really recommend you set up something like this, whether it's with Betterment or Wealthfront or Wealthsimple. You can look up robo advisors. They're pretty awesome, and they are changing the advisor game. How do I open up a new account? Well, it's going to ask me questions, and it's asking questions to determine my asset allocation that it thinks it should set up for me. This is what I recommend, by the way, guys, to I got my dad on this. I got my mom on this. I got my girlfriend's mom on this. So this is what I recommend for a way to automatically set stuff up so it has intelligence built in, it has a portfolio, and it's all automatic for you. So my goal for this account, what are your goals, right? Mine was building long-term wealth there, and so you can start to change the stock and the income, cash, commodities allocation here. But I really have to go through this. What's your understanding? So this is going to help you basically with some of your training, and also so you don't make too many mistakes, hopefully. For most of you guys, it's probably not extensive. I would put me at maybe extensive, maybe. Be humble, by the way, guys, in the market, right? The market does not favor people being too ostentatious and overconfident. You're going to get destroyed. When you hear risk, what is your first thought that comes to mind? Now, I think of the thrill of investing is funny, but it's going to make your portfolio aggressive or less aggressive based on this, right? So if you are someone that is worried that you can be left with nothing, it's probably going to give you a less aggressive portfolio, right? So for me, I see opportunity for great returns. Have you experienced a 20% or more decline in the market? I have, 2008, and hey, last month. What did you do when you saw a decline in your investments? Did you sell? I buy more. And it's trying to make it so it's going to allow you to set up for success. I make decisions and don't look back. Why not? All right, so now is creating a allocation. So I have to put 5,000 to get started. How much investment fluctuation are you comfortable with? The more I go with a higher standard deviation of volatility, the more likely I am to reach higher projected balance. You can see this just increased. It's kind of a cool tool. You can play around with it and be like, hey, look, I don't want too much swings. Well, guess what? Your returns over time might decrease there. How much do you want to contribute every month? This, guys, what I recommend you do, okay? So it's going to be totally dependent on you. For me, it's $10,000 a month. It used to be $5,000, but I like that I have a intelligent portfolio doing some of my buying for me automatically. I don't have to worry about it. It's also my international exposure and REITs and things like that and bonds as well. So I do have 10,000 set up right now per month. What I recommend you guys do is you put 20% of your after-tax income in here. Okay, so let's say you make $2,000 a month. You should try to put 20% in here. Okay, and I know that seems like a lot, so that would be $400 a month in here. If you can put $400 a month and you put it in automatically, it's going to deduct it from your account automatically, and you're just going to have it do it, and you're probably not going to stop realizing it's doing it. Maybe you can increase this amount over time. If you make, let's say, $3,000, maybe you can change this to $600, right? So here's the projected balance right now for 25 years, and I'll have $376,000 in 25 years from now, in 2045, right? So this adds up. This adds up quick, and you can see what happens if I add just one extra $100 a month. What is that going to do to my projected balance? Now it's at $496,000. $100, okay? That was all. And maybe $100 a month seems like a lot, but the fact that you can be at over $100,000 more from that $100 every month is pretty crazy, right? If you're willing to take a bigger risk, let's make it bigger. We can move this projected balance up. So you have to do what you feel is comfortable for you, and this is going to help you build out your goals. Okay. Next is this tax advantage? So if you have a traditional IRA or Roth IRA, if you have any of that, you can click this. Otherwise, it's taxable, meaning you can get taxed on it regularly. So find out if you're maximizing this stuff first. You should do this, and you should try to maximize this first before you start putting money in a taxable account. Basically, what these tax advantages account are, it's a little bit of a tongue twister there, is that they're not making you pay tax on the growth, okay? So there's no taxes on the growth of your account, whereas taxable, you have to pay taxes on the growth of your account once you have sold. So mine, let's just do taxable here. Click next. Tax loss harvesting. You should just click this. It's only going to turn into effect at $50,000. And this is basically helping you save taxes because it's selling at a loss for some assets and then moving you into the exact same assets, but they're under a different ETF. And that'll allow you to basically realize that loss on paper, and then you have a tax deduction. All right, municipal bonds. This is something you want to enroll in if you are maybe making a high level of income and you are in a state that has high taxes. So national municipal bonds are exempt from federal tax and might be exempt from state. If you click your state, I guess there's my state, guys. Man, slowly, this is just, it's hard to stay anonymous here, but I'm doing my best, guys, and I hope you guys appreciate that I'm trying to stay anonymous here. Thanks for that note on the last video, by the way, and I had to blur it out. My face showed for a second there. But you can do California if you want that, if you want those kinds of bonds, okay? So that helps you be exempt from taxes. So click next. Now, next here is selecting the portfolio preference that fits you. So do you want to be globally diversified, or do you want it to be exposed mostly to U.S. investments? Now, U.S. over time has done better in the last couple decades, but that might not always be the case. So I have a globally diversified portfolio, and boom, it creates all of this allocation for you, okay? And then I just have to click next down here, and it created all these allocations for me. It's trying to upsell me. You don't need to get upsold here. You can just click this one here. So that is how you create this portfolio. You can tweak it a little bit in terms of your goals. You can make it a little bit more risky, meaning more stocks. You can make it a little less risky. What I really recommend you do, though, is you do have a regular monthly deposit going to this account of hopefully 20% of your after-tax income. This will be an automatic way to deposit money in, and the robo-advisor will do the rest. It'll buy everything at your asset allocation, and it'll sell stuff when it needs to sell stuff to rebalance, so you stay at the percentage that you wanted. I'm trying to stay at around 75 to 80% stocks, and so it automatically does that for me, buys and sells and deposits everything. The other biggest thing is that it's buying really low-cost ETFs, so it's not charging me a lot. And I know 1% might not seem like a lot, but it's huge. Over time, that could crush your income goals. So I think this is exciting. I know it's really simple, and I know it takes away a lot of the guessing, which maybe is thrilling to invest. But when you see in a clear way your projected balance, and you can see how to do that, how to hit that, and how to stay in that goal and on that path by just having a monthly contribution, is pretty amazing and really powerful. So this is what I recommend to people. Super easy to do, super easy to set up. This does have a $5,000 minimum, which I know is not something that everyone can do. So you can check out other advisors through pretty much the same thing, okay? Betterment, for example. You'll have a management fee, but hey, it's doing all the hard work for you. And it's still charging you a really small percent. And maybe once you hit 5,000, then you can move it over to your Charles Schwab account. Thanks, guys, for watching. Please subscribe. Please like this video, and you will be entered in to win a $100 giveaway I'm going to do next week. So thanks, guys, so much for watching. Stay tuned. Leave me a comment below. What do you think about robo-advisors? The key is low costs in terms of expenses. It automatically diversifies your portfolio. It automatically buys and sells. It automatically rebalances, and it automatically deposits into your portfolio monthly, so you don't have to worry about it, and you can just see things grow over and over again. That's it. See you soon.